Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk 360 degrees trades. Here are a few images from my life in a village in Thailand. These are available on my website superiorprofit.co on the images page. Greetings, I am Sagar Nandi, active trader in multiple markets. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and registration platforms. Let's start with charts of instruments that often move the market. Dollar Index ETF UUP. Last week we had a trend line support and I was of the view that the support would probably hold. It did not hold. However, it did not break altogether also. What it did is create a false downside breakout. So it broke the trend line support, but soon after that rapidly went up. That is a false downside breakout, and now it has broken the trend line resistance as well. That makes UUP bullish, and therefore it may put pressure in the market if the bullishness continues. Let's have a look at its weekly also. I use the custom menu bar that I have set up to add the weekly backdrop template. Last week, I looked at the trendline resistance and I thought that the resistance was saying that price might go down lower. And that indeed happened. It did go down, but now we can see that it sharply reversed, broke the trendline resistance that I noticed in the last market recap, closed with a bullish shape candle with a bullish flow. That is bullish, and the next weekly resistance is also some distance away. That makes UUP bullish. The other instrument that tremendously influences the market without any failure, some pockets more than others, is the mega cap custom index, and that is very strong now. Last week when I looked at the bearish indecision cluster and the series of magenta candles and the bearish headwind, I thought that it might not go up. However, because of the trendline supports, I said that it was not possible to short. As it happened, mega caps rallied this week, created a new all-time high. I would not like to actually buy the mega caps looking at the series of bearish indecisions that keep on coming in both weekly and daily. At the same time, I cannot short it because there are too many supports. This is the same theme that I described in past several market recaps. Market is going up. Inside, not many stocks are going up. Breadth is actually weakening. However, I'm not able to short because there are trend line supports in multiple market level instruments. Mega cap is just one of them. Next, market breadth, internal health check. Usually the market follows the internal health, not the other way around. And though the market is going up, the internal health is not getting stronger. USA market breadth total view, the broadest view of the market. This composite index is gradually going up. We had another irrational exuberance thanks to Mr. Ian Woodward, who designed this symbol, that came this week. That is another reason I am reluctant to buy, though the market is slowly going up. What is doing better now? Growth versus value tilting up. Growth is doing better. And this week, small cap versus large cap initially went up, then came down. So there is a mixed signal. I would not rely anything on that. All we can say is that growth is doing better. Sometimes small caps, sometimes large caps. What we can see though is that the yellow, white, and even the orange lines, that is percentage of stocks above 50-day moving average, above 200-day moving average, and where 50-day MA is above 200-day MA. All of them tilted down in last couple of days. And there is divergence in advanced decline, up down volume also. I will show that on the weekly interval, which I already tweeted. So let's look at the tweet. On the superior profit X page, I tweeted two weekly layouts, one of the composites NASDAQ and NYSE. You can see the weekly interval here. The divergence is best seen for many of these signals in the weekly interval, which signals advanced decline and up down volume both. These are breadth indicators. NASDAQ composite on the left is steadily going up for 3 weeks in a row. However, percentage of stocks above 50-day moving average showing bearish divergence, very much so for advanced decline and also somewhat in up down volume. Relatively though, NASDAQ is doing better even in terms of breadth. If we look at NYSE, for several weeks the candle chart is going up, but here you can see the difference between NASDAQ and NYSE. NYSE is showing much sharper bearish divergence across the moving average percentages, advanced decline, and up down volume also. You can see the difference here also. So though both NASDAQ and NYSE are showing bearish divergences, NASDAQ is doing slightly better, and that is no surprise. NASDAQ is probably getting more influenced by the mega caps. Mega caps are influencing QQQ, that is influencing NASDAQ slightly more than NYSE. Those were composites, and if I look at the major indexes, different market pockets, small cap, again the bearish divergence is very prominent, though the candle chart is going up. Mid cap candle chart not going up for 3 weeks, you may say it is stagnant, but the internal health indicators are sharply coming down. Large cap, for 3 weeks it is going up, again severe bearish divergence in spite of mega caps hugely outperforming. And Nasdaq 100 hugely influenced by mega caps sharply going up, and we have less bearish divergence here. So we see that the pockets that are more easily influenced by mega caps that is the mega cap custom index itself, then Nasdaq 100 and Nasdaq Composite. Under the hood, Composite Nasdaq 100 are also weakening, but less than small cap, mid cap, large cap, and NYSE. The conclusion is that mega cap is holding up the market a lot. That is my conclusion. That was a look at the internal health. Let's look at the external view of the market. That is how most people around the globe see the market. SPY, very bullish week, overbought, shown by the stretch indicator for many days. I would not like to buy. It also has a bearish indecision cluster. It is near upper boundary. However, I am not able to short as well because of the trend line support. QQQ, that will be even stronger because mega caps rallied. By the way, if I go back to SPY, and you all know that already, SPY made a new all-time high this week. QQQ certainly, very obviously made a new all-time high, the strongest pocket of the market. Again, overbought for too many days above upper boundary. I would not like to buy. Here the trend line support is far away. So if it reverses and we have some kind of bearish signal like bearish headwind, etc., then I may look to short because the support is far away. So that is how I analyze the market. This is the strongest pocket of the market, but I would not mind shorting if it reverses because the support is far away. SPY not strongest pocket, but it has nearby support. I would not like to short it. That's how I put a lot of importance to the support and resistance lines, be they watermark support resistance for certain trade setups and trend line support resistance for all trade setups. DIA backdrop color is not bullish, but still it made a new all-time high, has bearish indecision cluster in daily. It is bullish and again not possible to short because of the trend line support being too close. Small cap IWM, after a long time, finally IWM made a new all-time high on Thursday, and Friday it reversed little bit. That does not change the trend. One could take a short day trade in IWM on Friday. I did it and I booked profit in the short day trade. But as far as swing trade is concerned, there is no scope of taking any swing short trade. What I notice is that here also the trend line support is far away. We had a bearish headwind earlier, so if I have a bearish flow now, that will allow me to short, but I may not short IWM. I may look for weak small cap stocks, weak fundamental stocks in weak industries and look to short it. So IWM and QQQ, these two pockets I am willing to short because support is far away provided it comes down. As of Friday's close, there is no scope of shorting anything. Now interestingly, if I look at QQQE, the equal weighted QQQ, until last week it was showing severe weakness, but this week it rallied. So not only mega caps did do well, the equal weighted QQQ, so all the QQQ stocks overall did quite well, and like IWM, QQQE also hit a new all-time high, then came down. Interestingly, here also support is far away. We had a bearish headwind earlier, so if it reverses from that bearish headwind price level, creating a false upside breakout, I'm able to look to short. So both QQQ and QQQE, QQQE even more than QQQ, allows me to short. And that makes sense. I'll not probably short the mega caps. The other QQQ stocks, they are creating a double top and a false upside breakout, and support is far away. It is possible to consider shorting those stocks. And RSP, interestingly, also went up, but the weekly candles are remaining indecisive. Similar to SPY, though RSP is relatively weaker, not bearish at all, it's just relatively weaker, still I am not able to consider shorting SPY and therefore RSP also, because of the trend line supports. The same theme that I have been describing for past several market recaps. Too overbought to buy easily and not possible to short because of market level trend line supports. But that view has changed this week for QQQ and IWM, where the supports are now far away because both IWM and QQQ rallied. Next, QEdge, it has bucket analysis thanks to Dr. Jeffrey Scott, after watching whose videos I incorporated it in my trading analysis. Pinpoints reversals with remarkable accuracy. There is no signal now. It also has, that is QEdge, also has sector industry stock breadth. It shows where the market came from, where it is now, and where it may go next. Both are breadth analysis. Let's look at them. Bucket analysis, as I mentioned, there is no signal. The percentage of stocks in the lowermost bucket and uppermost bucket, as it happens, both are same, 6.3%. It's balanced, but it is overall bearish. 57% of stocks are below mid Bollinger Band. That is a far cry from the all-time market highs being hit in DIA, SPY, QQQ, IWM. Astonishing, isn't it? Majority of stocks are actually below mid Bollinger Band, but the market keeps on making new all-time high. Internally, the breadth is not so strong. And if we look at longer term period, 1 month period, sector industry stock advanced decline breadth is still bullish, but 10-day period, also longer term, has already turned bearish. This week, 5-day period has also turned bearish. Friday is also bearish, a far cry from the new all-time highs being made by DIA, IWM, SPY. That is why I am reluctant to buy in this market. Are there more evidence of weak internal breadth? Let's see, find the technical breadth. We only profit by buying stocks going up or shorting stocks coming down for directional trading. Technical breadth shows the overall posture to adopt and allows easy drill down to find low risk trade setups. Weekly technical breadth. Mixed between bulls and bears, a far cry from the all-time highs being hit in multiple market ETFs. That was weekly breadth, and daily Friday's technical breadth is quite bearish. So this is one breadth inside that allows me to short. Headwind having a bearish alert also allows me to short. That's only one pocket of the analysis. Q market level summary. The most important trading decision is whether and where to buy or short, or whether to stand aside. My conclusion is, as of Friday's close, I would like to stand aside, a view that I had in the last market recap. What changed from last market recap is that for two pockets, QQQ and IWM, the trend line supports are far away now. Therefore, if they continue to come down, if they start to come down, not continue, if they start to come down, we noticed both equal weighted QQQ and IWM. Those two charts allow shorting. So I would not mind looking for constituent stocks that are fundamentally weak in weak industries giving low risk short setup. But as of Friday's close, I'd like to stand aside. Review of last week's trade ideas. I did not share any because my view was to stand aside. This week's trade ideas, I would not like to share any trade ideas again because my view is to stand aside, but I would like to show you a few stocks just to demonstrate how I look at the market. Let's use the comprehensive layout where we can see the trade setups and also the cumulative directional forces and momentum signals. And I'm going to show you a series of stocks and show you how I reject stocks or shortlist stocks for buy candidates. Start with the stock CFFN, Capital Federal Financial, that is a banking stock probably. No, no, okay, okay. I think I made a mistake. I made a mistake. This was Thursday's list. Okay, let's. This was Thursday's list. Sorry, I didn't do the analysis for Friday. Why don't I do this then? Okay, sorry about that. A series of stocks I wanted to show they had bullish signal on Thursday. I thought I was looking at Friday's data. They had Thursday, but I would have rejected the candidates anyway because of fundamentals. That's what I wanted to show, fundamentals or industry score. Okay, let's do one thing. I think one pocket of the market is looking very strong. That is gold mining stocks. So what I am going to do, I am going to generate a list of the liquid stocks. While it is doing that, let me look for the gold mining industry in QH, and it is super strong. It is not a turnaround candidate by any means. It had been strong for a very long time. Though internally many industries are actually weak, this is not weak. Relatively it is strong, and performance wise also it is bullish, up and up and up. So if we find a stock in gold mining industry, that may be a buy candidate, though I'll be aware of the fact that it means the industry had already been strong for a quite long time. Okay, the liquid stock scorecard has been generated. So let's drill down on the liquid stocks in the gold mining industry. These are the gold mining industry stocks. 29 stocks were found, 97% were up on Friday, 97%. Contrast that with what we saw in QH for the overall market. Only 25% of stocks in S&P 1500, a nice mix of large, mid, small cap stock. Only 25% were up overall. Whereas for gold mining stocks, liquid stocks, 97% of stocks were up. Let's look at only on the up stocks, see if they had any possible buy trade setup using QFinder. We have multiple stocks that has possible buy setup. I'm not going to look at all of them. You could look at them one by one. What I tend to do is I look for the ones with more setups to start with, especially if I'm doing the analysis just before the market close, then time is of essence. If you are or I am doing it after the close, we may do it in any order. Just before the close, I'd like to look at the strongest ones first. So these two, Newmont NEM and HMY. Let's open the chart. and I would like to look at it with the comprehensive layout. HMY, this is looking very strong. It has a breakout in weekly, breakout in daily, relative performance sharply going up, has big move, bullish pressure, and we can see it has in total 5 directional forces and 4 momentum signals. Let's open the commentary to look at them. What are those signals? In terms of directional forces, they are gap up and move higher, big move, bullish flow, bullish pressure, trend line breakout. So 5 directional forces, and if I click on the momentum chart, it has 4 bullish momentum, which are they? Bongo, Kahuna, Mobo breakout, pocket pivot. So this was one stock of interest. Let's move the commentary away. The other stock, let me look at one more stock, Newmont. Also in gold mining, we saw there were several stocks with possible buy setups. Let's look at only 2 of them. This is less of my choice. This is also super strong. This also has many directional forces and many momentum signals, but it is too far above the upper boundary. It is already at jump thrust high. I would not like to buy that. If I go back again to the previous stock, BM, no, what was it? HMY. HMY is also bullish, but it is not at jump thrust high, and it has just now broken out of trendline resistance and weekly daily. That's how I look at stocks with trade setups and then look at their fundamental and industry score also to finalize my shortlist. So if I was going to buy one of the gold miners out of HMY and Newmont, I would rather buy HMY. There are other gold mining stocks also with possible buy setups. Many of them, I will not spend time to look at them. You may look at those and choose one or few of them. I think nobody would like to buy so many gold mining stocks at the same time. People generally would like to diversify. So that's how I will look at it. So I will list HMY as my trade selection for this week with some reluctance. Why reluctance? Because my decision was to stand aside. But gold mining is very much moving contrary to the market. So probably that caution is not warranted. So let me list it as a possible buy candidate. Other than gold mining, I should mention I would not like to buy any other industry stocks right now. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today just as you would almost any other day. Thanks a lot for joining me today. I look forward to seeing you in my next session. Have a great weekend, and as I always say, as these live examples I am hopeful shows, there is no reason not to do that. Trade profitably. Thank you.